What's going on, guys? How you doing? What's up, Gravinder, Nils, Dhruv, Ginger, Ricky? Hope you guys had a great week. I know we had a lot of winning trades this week. A lot of stuff went right. We told you guys yesterday. After that close yesterday, I was expecting a gap up open and a little bit of a pump. We didn't get a full pump. I mean, IWM SPY barely got anything done this morning. It was just kind of sideways. But if you guys look at IWM, that's where all the money was flowing in the morning. We got a nice little run up in the morning before that dump. Like I said yesterday, guys, there's supportive flows in the morning. Usually, especially on OPEX days, which means options expiry days. What's up, Shivam, Papa Gnush? How you doing? I told you guys last night. Again, that's why I was expecting a gap up. Yesterday, we had a big dump into close. I seen everyone on Twitter, everyone in the group. What's up, other Andrew? How you doing? Seen everyone online jumping in puts here right at the end of the day thinking we're going to get a gap down. That's why I said it's Friday. Friday is always known for flows in the morning. So what did we get? I said if I was going to take puts, I'll take a midday here. And we scalped Tesla beautifully today. Um, Other than that, I mean, we got a big flush yesterday. People jumped in puts, overnight gap up and go. That's always, guys, imprint this in your mind. Do not go into Fridays with puts, or that's not a 100% rule, but most of the time you do not want to carry puts into Fridays because it's an options expiry day, because it's the end of the week. There's flows that you guys don't know about in volatility that hold up the markets usually in the morning and usually at the end of the day. So even though, like I told you guys, Vanna probably will show up end of day, even though we didn't get a fat rip here at the end of the day, that doesn't mean Vanna wasn't here. Vanna could have still been present. That's the only reason we didn't flush more on the markets. So just keep that in mind. Other than that, we did pretty solid this week. It was a great week. Next week is OPEX week, so it's going to be even more tricky. But remember that chart I sent you guys. I sent it 2 times, the 2018 interest rate hikes versus now. It's setting up exactly the same. How you doing, Yash? Exactly the same. So there was about a 12% drop. I'm not going to measure it out, but even in 2018, there was a 12% drop. There was a 7% hike, and then we went right back down, almost double bottomed, and then we ripped right back up, triple topped it, and then we dumped. So just keep that in mind. It's looking more and more like that's the case here. I'll send that chart again, but it's under charts and watch list. I sent it on February 2nd if you want to go look at it. I also sent it last night. So keep that in your mind before you start taking out farther calls and stuff. Other than that, very volatile day. We told you in the morning it was going to be volatile. We got that. QQQ, the weakest of them all. Kept taking out low of day after low of day. Other than that, I mean, it's an ugly chart, guys. It's broken. The next support is way down here with the bear flags around 340. Let's see what happens next week. OPEX, expect a lot of shenanigans. XLF double top. Again, last time we took short of bank puts, guys, we got this move. And today I took more bank puts. So remember that. Yeah, Ricky took bank puts yesterday as well. Almost exactly a double top. Last time we were this extended off the 8-day moving average, I explained to you stocks should not get, especially banks, should not get this extended off the 8-day moving average. Look how extended we were yesterday. Last time we flushed, we were about $1 above the 8-day moving average. This time before the flush, we were about $1 above the moving averages. So it's almost the exact same pattern, guys. It's double top, everything's set up. Let's see if we can get a flush down to the 50-day moving average at least, which would put us at 39.42, which would put those BAC puts in the money. AXP should also go down in the money if we get that pullback next week. IWM was the strongest lately. Today pulled back with the rest of the market. We have a support at 207.50 was resistance. We hit it yesterday and just dumped right off it. 202 was the support yesterday. That's a clear level. And today we closed below 202. So next week on IWM, the level to watch, we might go all the way back down to the bear flag here. If we don't reclaim 202 early in the week next week, I see IWM coming right back down to 194, 193 area. SPX, same thing as SPY. ES, same thing as SPY. VIX, huge pop, guys. So this was the tricky part about VIX. Remember I told you we were forming higher lows and higher highs on the VIX? They came down. They just undercut this low here. And then they ripped it 50% in 2 days, guys. Or at the highs, it was more than 50%. Yesterday, 20%. Today, 16%. So 36% overall, around there. But at the high today, over 30, almost at 31, that was a 50% move in 2 days on VIX. That's obviously cause for a lot of volatility in the market. $20 remains as a solid level. We came down, we tested that one. This 4 days was just a complete fake out, and now we're headed back up. The key level for VIX now is still this 38.94 level. If we get above 38.94, this market's going to be in a lot of trouble. And that's what it looks like it's setting up to do. If you zoom out on the VIX, it looks even worse. The weekly is still a higher low, higher high pattern. So it's the same thing when the daily pattern doesn't line up, but it does bounce. Look at this. So we put in a high, we put in a low, we put in a higher high, and now we put in a higher low on the weekly. So you just zoom out whenever you're doubting your charting, whenever you're doubting anything. Zoom out from the hourly to the 4 hour. If that doesn't make sense, zoom out from the 4 hour to the daily, to the weekly, to the monthly. And right now, VIX does look like a higher low pattern is forming. And like I told you guys, this is like no time in the past that I've seen. Usually it's just huge spikes and then dumps, big spikes of fear, like some war headlines, some trade war headlines, some crazy stuff that Donald Trump said. But right now it's slowly building. There's so much fear in the market. There's rate hikes, there's inflation, there's Ukraine war, there's China war, there's Biden being an idiot, there's COVID, there's so much stuff right now. So VIX is just kind of building up. So that's the scariest part about it. If it just slowly grinds up instead of one big spike and sell off, if it slowly grinds up, you never know how long this is going to take. So we need a reversal on VIX or else we're in trouble. Yields back under 2 is a solid sign. Let's see if we get followed through back down. As long as we're up here above this yellow line, which is the highs from November 2019 or December 2019, as long as we're above here, the market's in trouble, especially growth and tech stocks. If we start to roll over here and come back down to test this 172, then we can get some up movement in those stocks. Other than that, no dice. And Bitcoin is one of the highest risk assets. You know, Bitcoin will get crushed. If those yields continue rising, if the market continues going down, Bitcoin will also get crushed. And right now we took out my first level of 43175. Next is 4,500. Then right back down to test those lows at 35,000. Might come down. I hate Trudeau, Gravinder. You don't have to say that twice. Drama teacher. That's for another day though. Apple, big bear flag intraday. Like I said, guys, this looks like it wanted to break down a lot more. I have a target on Apple at 166. I know Bookie's being very patient with it. He has great patience. I'm watching him grow as a trader. It's going like he's doing amazing. We were talking about this Apple for days and days and days. There was all the moving averages were right underneath this bull flag. If we broke the bull flag, we should go straight down to 166. Right now we're trading at about 168. Should be at least a $2 move back. And if we don't hold the back test of this big wedge all the way from September of last year, September, wedge started forming. If we don't hold that wedge and we go back inside it, there's a lot of downside possible on Apple. You can even see Apple at 149, guys, which is a 200-day moving average. So remember that on Apple. Amazon, absolutely terrible earnings. I don't know how this stock is still above $3,000, but this will be a prime short next week as well. Mamba crushed this short today. As you guys see, we're in a huge range all the way since July of last year, June of last year. We have this huge range here, and today we went and tested it down there at 3055. We held it for today, but next week I do expect it to roll over and break the 3055. Where does it go? There is a big gap to fill for earnings now on Amazon. Look at this. So we have a gap fill from 3012 all the way down to 2885. So remember this number. Amazon can go visit 2885 next week. This is OPEX. Anything is possible. And I don't doubt that it can get down there if the market wants to take it down. Nvidia, I'm still in those 300 calls for March 4th. We have earnings next week. They started adding premiums this week. Today I took a couple more. My average is around 2 on them. If we get an earnings run up anytime next week into February 16th, I believe the earnings are. If we get any kind of earnings run up, I'll get out of most of it. I'll hold a few. And I expect them to crush earnings, but let's see. This chart is completely ugly. Huge downtrend, little bear flag, and now we're breaking down to the downside. If 234 doesn't hold on Nvidia, then 228. If 228 doesn't hold, then we can go see lows again, which is around 209, guys, on Nvidia, one of the best companies in the world. So that'll tell you a lot about the other companies you're watching. Nothing on LC. I was just looking at it. Tesla, complete trash. Look at this. Very, very tight. So everyone on Twitter was like, oh, Tesla's getting really, really tight. It's set for a huge break off, right? What you have to realize is when Tesla gets really, really tight, or any stock gets really, really tight like this, it all depends on which direction it picks. Just because it's getting tight doesn't mean it's going to rip up. It can also rip down, like you guys seen today. Down 45 points today. Beautiful breakdown. This chart is very, very bearish. I would not play longer term calls on it now. Yesterday we were sucked into some 1100s, as you guys know, but that was a starter position. I'm completely fine with that going to zero. I said 945 was needed. We didn't get it. Started adding premiums. The options get more expensive. So around earnings, especially in an earnings run up, when people think the earnings are going to go well, the market makers realize that and they add enough premium to protect themselves. Even if the move goes in your favor on earnings, you won't get paid as much. For example, Nvidia, let's say you were going to buy 270 calls for next week. That's $40, $30 out of the money from here. If they didn't have earnings, maybe they cost like $3, $4 for next week. Now that they do have earnings, they're probably up to like $6, $7. So they just make them more expensive just to protect themselves, both calls and puts. Tesla here just looks like complete trash on the bigger time frames, and I do see another 200-day test at 824 coming. At least 824 is coming on Tesla in my opinion. If the weakness continues, obviously if the market rallies next week, we can rally right back through 919 and then make it all the way back to the 50-day, which is at 994. Anything through 945, I have to check that level again. That's from 2 days ago, but if we get through there, it should rip. Dawkins, again, growth. Very, very bad day today, guys. But the reason we don't panic at My Stock Life, you guys seen us. We weren't panic selling out of anything. We were looking for scalps. We were looking for stuff to trade, right? The reason we don't panic here is because if you look at this chart, a 5-minute intraday chart, this is what you see since yesterday at 1 o'clock. All you see is straight down from Dawkins, right? You can zoom out. I know a lot of people watch the hourly chart. That's an ugly chart as well. Look at this. Head and shoulders and breaking down, and just straight from yesterday 1 o'clock straight down in a line on the hourly. But then when you start zooming out, guys, when you start zooming out, like I always say, whenever you're in doubt, just zoom out. Look at this daily chart. There's absolutely nothing wrong with this chart. I know there's OPEX next week. We put in a low, we put in a lower high, we put in a higher low, we put in a higher high, and now if this is the low here, Dawkins can still rip. Like, there's nothing wrong with this daily chart at all. Look at the bear volume today compared to the bull volume when we were buying. Look, increasing bull volume on this whole daily trend change. Today, less bear volume, less sell volume. If this is the low, the market starts going bullish next week, Dawkins can still go. So keep an eye on these stocks. Don't ever panic out of your positions based on a 5-minute chart. Like, oh, the market's crashing. Oh, Putin is gonna... These news articles are made for you to panic sell stuff. Putin's gonna attack Ukraine. Well, I'll tell you something. If Putin does attack Ukraine, they're gonna start a nuclear war, and you're not gonna live to have any of your money anyway. So don't panic out of your positions. Just zoom out. Always zoom out. That's the main point of this. AXP here. We took AXP short today. They're already up huge. I know a lot of people already closed it for huge profit. Why did I take it? So first of all, we have this broadening wedge. I don't like really trading these broadening wedges unless they're exact. Like, we didn't get exactly right to the top, but obviously today with the weakness in financials, I remembered AXP was going to all-time highs. So AXP was absolutely running, screaming. It was up 3% this week. It was up 5% last week and up 12% the week before on earnings. Big volume, everything looked good. 3 weeks straight off the bottom of the wedge. Of the widening wedge, sorry. We ripped straight up, guys, and now this is an ugly weekly candle. Ugly. That means profit taking is there. AXP, I haven't traded much in the past, but I always look for longs on this one. I never catch it, ever. And if you just look, zoom out on AXP, how many times has it been far away from the 8-day moving average, especially on the weekly? You see that red line? Look, it just hugs the red line, whether it's above or on top, or above or bottom. It just kind of hugs that line. You see this big dump, we got too far away from the 8-day moving average, bounced right up. Anytime you get far away from the moving average, you see, too far above, right back down. too far above, right back down. And look at it right now. It's too far above. The 8-day moving average is at 176 on the weekly. We're trading at 191. So a $15 move down is possible. Even on the daily, we did touch the 8-day moving average today. But again, anytime we are too far away from the 21-day moving average, it's the same story, guys. You can go out, look at patterns. It's just how I trade. Previous patterns help me. And if we get the move I'm expecting, if the market is weak next week, especially with that XLF double top, American Express should come down and test 181. Do we get 181 by next week? I have no idea. Do we get enough of a move to get paid? Well, we already did. And that's just how I play it. BAC was one I took today as well. I know I jumped on a day late on these guys. So yesterday was the perfect day to short BAC. Complete perfect double top, almost near all-time highs, V-shape recovery, and then the stock market just shit like all over, like bad news all over the place, and stock market went down. That gives me more confidence in this play. So we rolled over yesterday, but yesterday we still touched the high. Today was the first clear day of weakness, came down, and let's see if we can break the 21-day. And just on your own on the weekend, you can go over charts, you can look at them, especially bank names. They love to stay close to their moving averages. I know tech stocks, meme stocks, they get parabolic sometimes, but these bank stocks and these stocks that don't move much, they usually hug their moving averages on all trends up and all trends down. And if whenever they get too far away from them, they pull back. So just keep an eye on that. And another thing I told Bookie today, I don't know how many people were on voice chat, but I want to get this message out there. If you're playing tech or meme stocks and you're playing call options, you can go farther out of the money. You can take $1,000 call on a 900 when the price is 900. That's okay. But when you're playing bank or something that moves slow, energy, something like that, you have to have options closer. So if I'm playing BAC puts for next week, if I take $40 puts, I'm an idiot. I'm not going to get paid on them unless the whole market completely crashes. Then maybe I get paid on them. But since I'm playing BAC, I'm going to take like 46, maybe 45, 50, like nothing too far. Maybe $1, $1.50, $2 max. Other than that, if you're taking $40 puts, just don't. I mean, unless you're taking like way out, like 4 or 5 months out, which I don't recommend in the first place. But just make sure you know what you're playing. For example, BAC, if I'm taking puts for next week, like I think I took the 46s or 45.50s or something, that's $1 out of the money or $1.50 out of the money. If I'm playing Shopify and I look at options that are $1, $1.50 out of the money for next week, those are going to be like $100, $200. These bank contracts were 30 cents. So that's just the difference between Shopify, between the banks, between WAC. You can go look at WAC contracts. How much would an $80 contract for next week be? You can look at it. It's going to be super expensive. That's why it's completely different plays, completely different options. Just keep that in mind every time you play. Other than that, I hope you guys had a great week. I definitely had a great week. I will see you guys